Good morning. Today is Monday, June 26th. The time right now is 17 minutes to noon in Singapore. And over the weekend, we hear news of a mutiny in Russia. Remember, the mercenary group called Wagner that was headed by a guy called Prigozhin has actually started a rebellion, and he actually took his troop to try to march into Moscow, but he actually changed his mind after a deal was struck to forgive him for staging this, and nobody know where he is right now and where he will end up in. Essentially, Belarus President Lushenko actually came in reportedly to strike a deal in which the Russian government actually agrees with the content that allow him not to prosecute him and not to basically take any action against him. So nobody know where this guy is right now. Is this a feint? Is this a part of a bigger tactical strategy dreamed out by Putin himself or his military commander? Nobody knows for sure, but it is dramatic nonetheless. And this morning when the market opens, I was expecting some kind of volatility. Although right now the rebellion has been put down, the mutiny has been put down, nobody knows what is going to happen, because if this is a mutiny, obviously he was financed by somebody, and without knowing who that somebody is not going to be over for now. But again, nobody knows exactly really what is happening over the weekend, so we have to watch events as they unfold. In the meantime, let's take a look at what happened over the on Friday, last Friday, when the market closes. We see that on the get-go last week, the entire US equity market has been falling. The Monday was a holiday because they were celebrating the Juneteenth holiday, and Tuesday market reopened, and he has been one-way street all the way to Friday. And in the Dow Jones, you can see here in the 4 hours time frame, the Dow Jones actually went out to as low as 33,646 and then closed on a weak note. Does it mean that the US equity market has already turned? In my opinion, not quite. There is no confirmation that we are seeing a reversal in equity markets so far, at least not in a higher time frame. So for time being, I will just classify this as a technical correction. And if it is a correction, then at some point in time, the market will challenge the most recent high, which was traded 2 Fridays ago at 34,588, which coincide with the quad reaching, in which most option expires on the same day. We have stock options, we have few options on futures contracts here, all expiring on that day itself, and that marks the peak of this run. So let's see, going into this week and into the last week of June, whether the market can close on a strong note. So that is what we are watching. Now, technically, if the market can go down a little bit more, somewhere between 33,350 to 33,600, I think that area should offer some kind of technical support for another run higher beyond 34,588 that we saw last two weeks ago. In the S&P 500, we see a relatively shallow pullback relative to the Dow Jones. The high traded was 4,448.5 thereabout, and he has pulled back. Now, the market right now is within a bracket of prices which actually may offer some kind of technical support. This bracket of prices is at 4,300 to 4,355, and if the market can go down, it has already gone into this bracket of prices. So let's see whether it can actually be the launch pad for another rally attempt beyond the 4,448.5 that we saw 2 Fridays ago. Now, in the Nasdaq, we have seen one of the most shallow pullback, if this is a pullback at all, and the market peaked out at 15,284.7, and the market has been trading lower throughout the week itself. And now it does appear that if the market do extend lower, which is again not a given, but if it can, a better place to buy will be at 13,900 to 14,430, and this represents an area in which you may actually use this as a launch pad for another rally attempt beyond 15,284.7 that we saw. Ideal bracket, as the market breaks into 16,000, just be very careful. The market is increasingly vulnerable to profit taking, and if that's turn into a landslide, it could actually cause the entire rally to topple over. So be very, very careful, okay? In Asia, we can see the Nikkei actually started to pull back on Friday, in which you can see this massive pullback down from a high of 33,772.9. And now the area right now where we see the high, the reason why it pulls back was because last week we saw inflation numbers in Japan is looking quite serious. The official headline numbers suggest that the CPI numbers in Japan is at a 45 years high, and sooner rather than later, the Bank of Japan will have to reconsider its monetary policy, because it remains to be the only central bank that is still practicing negative interest rate when the rest of the world has already hiked interest rates. The longer the BOJ do not change its monetary stand, the more capital will leave Japan, because the interest rate differential between Japan, which is negative 0.1, against, let's say, the Eurozone, the UK, and the US, is widening every single month. So this is a concern. And like I said, the Bank of Japan government will have to make a hard-nosed decision, which one will be a lesser evil. Do they want to deal with the possibility of explosion in their national debt, or would they want to tackle the very seriously runaway inflation that we are seeing right now? So either way, the market right now is eyeing that, and that's the reason why it came up. This morning, the Nikkei extended its losses to 32,000, almost 400, and maybe it will dip a little bit more. Ideally, market will drop into the area between 31 to 32,000 to find a bottom, and we'll see what happened then. Okay. Over in Hong Kong, the last week, of course, we all know the Chinese celebrated their rice dumpling festival. Everybody will know that because it is a dragon boat festival as well. Okay, so the Chinese do place a lot of importance in this particular festival itself. Hong Kong only closed for 1 day on Wednesday before they resume trading, and the market has been falling since. And this morning we saw another dip to 18,767 in the first half of today's trading. And this bracket of prices actually is a great place for the market to stabilize. This area is for 18,500 to 18,850. So if you can see buying interest here, it offers a very low risk, high reward setup here. Essentially, if you want to go and trade counter trend, this will be a good this will be a good time to actually do that, because the market has a possibility of doing a 3-wave rally to eventually challenge the March high at 21,000. So that remains a possibility. Over in China, the rice dumpling festival extend all the way to the weekend. So this is basically a catch-up move. So this morning at get-go in the morning, the market has sell off quite drastically to 3,800. So the market right now is doing a bit of a rebound. Okay, so this is more of a catch-up move to Hong Kong. So on a technical basis, on the risk reward basis, this also offer a very low risk, high reward setup for those who are interested to trade counter trend. Basically, the market right now is 3,836, and if you think the market have more room to go up than come down, then basically the stop is just below 3,777, and in exchange for the possibility the market will gun up and basically challenge the 4,000 level one more time. The last time we tried, it didn't quite make it, and who knows, maybe the second time will be better performance. In the energy market, we can see that the oil prices actually dipped to a low of $67.32 on Friday in New York, giving us a triple bottom, which is technically a bullish reversal pattern overall. And we can see that the market has basically been kept just under the $73. So for all we know, the market may actually bounce back up to test the $73 one more time. And this morning, we have a bit of a reaction in Asia on the back of the mutiny that I just mentioned at the beginning of this presentation. But since then, the market has frizzled out, and briefly, it was trading above $70 per barrel. Right now, it is trading on the lower end of $69. So who knows, maybe this is waiting to be bought up again when London open. Okay, when London opens, obviously, then the market will be clearer. The technical outlook will be a lot more clear-cut by then. Let's see what happens. In the gold market, we can see gold actually dipped to $1,910 last Friday, and followed by a rather robust rally. But again, this is tentative. There is a very good possibility that a low, at least temporary, may be in place for gold. And if so, then the market may be getting ready to rally. And just remember, the last time it couldn't cross a major barrier. That barrier is $1,970, followed by another one at $1,985. So between these two levels, the market should be able to find a top. So if you are a counter trend trader, they could again give us a possibility of a counter trend setup. Basically, all you need to do is place your stop below $1,910 for the possibility of a rally to $1,970 thereabout. Over in the silver market, you can see that silver had a low on Friday, which is the lowest we have seen so far this month at $22.11, followed by a rebound. And that low here is actually within a very wide range of possibility here. This range is $21.24 to $22.30 thereabout. And this area could actually be a technical area to accumulate buying of silver for the next leg higher. Now, do remember the obvious level to watch out for will be $24.20, because this is where it couldn't get beyond the last time it tried. Okay. Over in the dollar index, we can see the dollar has been falling all throughout the month of June, 104.60 all the way to 101.50 levels. And then last Thursday, it actually managed to find a bottom at 101.49. And then beyond that, we can see a robust rally on Friday, and now the market does appear to want to come back a little bit. So this rally from 101.49 to 102.79 basically represents a new pattern altogether, because we have seen this market finish its 5-wave decline, and once it finished a 5-wave decline, it could either signify the end of a pattern and the beginning of a new pattern. So let's see what happens over here. But ideally, from what we can see so far, if we can see further pullback in the dollar index to somewhere around 102 to 102.15, that could represent a buying opportunity. At the minimum, we can see we can expect a ABC move, equality move, to challenge somewhere at 103.75. Okay, so that is a possibility. Do watch out for that. Okay. Now, as the dollar is looking to rebound, the other principal currency is obviously inversely correlated. That means they are coming down. So in the euro versus the dollar, we saw a high traded at 101 on Thursday itself before it comes back down to 108.45. And now we see a little bit of a rebound, very similar to what we are seeing in the dollar index, just a inverse image. Now, if that's the case, ideally, we want to see euro dollar continue to edge higher to go to 109.30 to 109 half levels for the market to actually be kept, followed by another decline below 108.45. So that could represent a buying opportunity here. A selling opportunity here. Now, sterling has a very different structure altogether. While the euro dollar appears to have completed a 5-wave rally, the sterling does not look like it has done that. So it could, for all I know, be a failure. Okay, there's such thing called a failure to go beyond the 3rd wave high. So right now we are seeing that possibility, but on the other hand, we are leaving the door open for another challenge of 128.50 levels, which was last traded on June 16. So this 5-wave rally could actually be completed even with the possibility of an extended run to 130. Okay, so this remains the most optimistic outlook for sterling. On the other hand, if you believe that the challenge of 128.40 is a failure of the 5-wave rally, then the market could be getting ready to collapse. So do watch out for that. In Aussie, the rise from 0.64 half to 0.69 has seen a pullback of 50%, with a low so far on Friday at 0.6685. So this could represent a technical pullback. Okay, 50% pullback is very, very normal. So this could be one of those incidents. And if that's the case, the area between 0.6630 to 0.6680 represents a buying opportunity. So this could be telling us the market is getting ready for another rally attempt. At the bare minimum, a move back to 0.68 does look like a near-term possibility here. Okay. Dollar Canadian has been falling more pronouncedly than the other dollar rates. You can see the dollar versus Canadian has actually gone down and down and down and hit a bottom here at 1.3135 near 40 last Thursday, before we have a bit of a rebound. But the rebound seems to have been eroded this morning. We see prices coming back to the 130-160 levels. Does it mean that the rebound is a fake move? Possibly we may see the dollar Canadian continue to grind lower. So if that's the case, for all we know, it could go down to test at 131 levels and then find a bottom somewhere around those levels before it tick higher in a technical rebound. So do watch out for further losses in dollar Canadian, but be careful selling this dollar index, this currency pair, because it does appear to be the last leg of a extended fall. Okay, so do watch out for that possibility of a major sharp rebound. Okay, in the dollar yen chart looks very different from the dollar Canadian. While the dollar Canadian has been falling, the dollar yen has been rising. Both are dollar related. Why are they showing us two different things? Okay, for one, the dollar yen strength is not so much the strength of the dollar, but the weakness of the Japanese yen. So earlier on, when we were talking about the Nikkei, I mentioned briefly about the high inflation situation right now in Japan. And because the Bank of Japan continues to maintain an ultra loose monetary policy, keeping its interest rates at negative 0.1, that is tearing the market apart, because other central banks are offering much higher interest rates, and which will see an outflow of capital. And if speculators starts to dump the Japanese equities, then that could actually cause the dollar yen to come back down. So you can see that there's a possibility the dollar yen rate may have seen a temporary high, but we need to see more evidence of that. The high so far is 143.87, and the nearby support is probably around 141.20. So do look out for that possible pullback here. Now, in the digital asset space, we already saw the spectacular rally in Bitcoin from the low of 24,800 thereabout. It has rallied all the way up to 31,500 thereabout. And right now we are seeing a little bit of a pullback over the weekend starting on Saturday, and this pullback has seen a three-wave move, possibly either gunning for this very narrow band of prices between 29,600 to 29,900 levels. And if we come back into this bracket of prices, I think it is possibly a buy. Okay, but again, watch out for a much deeper correction. But then again, the one thing is clear: this rally here has changed the entire outlook of digital assets, in particularly Bitcoin, because the attack by the SEC, which is the Security Exchange Commission, is centered on anything but Bitcoin. Okay, but of course Bitcoin also suffer a little bit, because the main thesis of the SEC trust to sue Binance and Coinbase is that they've been offering other tokens as securities. So Bitcoin, as far as SEC is concerned, is not categorized as a security. So if that's the case, maybe the other tokens will be more at risk compared to Bitcoin, which is clearly being classified as a non-security. So if there's going to be any good news, it's probably going to be centered on either Bitcoin or Ethereum, because both coins has been defined by the SEC as non-security. So any rally will be benefiting these two coins more than the others, and this could actually see further gains in both of these coins. That's all I have for you for today. In the meantime, you take care. Tomorrow, tonight we don't have any major economic release. The major one will be tomorrow, where we will be waiting to see the release of the US durable good orders, as well as the non-defense capital goods orders from the United States. So in the meantime, you take care. Come back to you with another update tomorrow. Bye-bye.